Hello. Today we have a wonderful guest here with me to discuss the series we have been doing. My offer has been accepted. What is next? Well, I have brought her today here to talk about all the way starting from pre-approval to the closing. You know, I have already done recording and given you enough instruction how pre-approval is critical to the process of success for you to achieve your dream, which is your home. I believe, and we are going to do some interview with Jen Hernandez here, who is from Legacy Mutual. Hi,
Thank you.
Jen, how are you doing?
Hey,
And
Sonal.
are you ready to talk to us?
I'm ready. I'm very ready.
Okay, so first thing what I want to stress with all my clients, that the second best friend for you in this process, after me, I'm your realtor, is your lender. And why is it? Because you have to be in relationship. She has to know your asset, your credit, and your liability. So, you know, the income to negate that correctly, accurately. So it is very critical because sometimes the way consumer estimate their income is a little bit less, or I think it is quite a bit less, right, Jen?
Yeah.
Than what we can figure it out. The asset also has some rules and all that. We will be talking about that. The process is good for all categories of people. It's not only for first-time home buyers. I tell people to start talking to the lender, even if you're investing, even if you're a second-time home buyer. It is equally critical because there are so many programs. Believe me, the first program which you got qualified for is not going to work when you're buying a second-time home, because there may be some caveat, there may be some additional income or additional security of the asset you may need, and that is all we are going to talk with Jen today.
Awesome.
Jen, let me ask you, let me start this. What are the programs for, let's start with first-time home buyers, very
Sure.
basic. Do you think they're all the same? They all fit into the same category, same way? It's like a cookie cutter, you just put it in and it works, so you don't need to talk to them?
No, it doesn't work that way. So basically, the main types of loans that most people fit into, I mean, I would say probably 70% of the market, is either conventional or FHA. So conventional is governed by Fannie Mae and Freddie Mac. You might hear those words. And then FHA is the loan by the Federal Housing Administration. It's the loan that's more lenient. You can have lower credit scores. That's usually where most of the down payment assistance sits. You can get down payment assistance as a first-time buyer with conventional, but it's limited. It's more limited. It's more limited, and the rates are a little higher. But every state is different, I will tell you. So depending on who's watching this, but when you're buying in Texas, the state governs the down payment assistance programs. Now, there are some credit unions and some more private or individual companies that might have their own hybrid down payment assistance program.
Okay.
But for the most part, to answer your question, one size does not fit all. And so we always recommend talking to a localized state lender in the state that you're in. So if you're in Texas, talk to someone in Texas. Better to talk to someone in Houston, which is where we are, because the local lenders are going to know what local programs might be available. Like there's a City of Houston program. There might be a localized product available that could help them that someone in another city or definitely another state might not know. So globally, you're either conventional or FHA, more than likely.
Yes.
But there are different programs that are under each of those that you might qualify not only as first time, but actually as second time buyer. There are some programs that you don't have to be a first time buyer.
So my question, next one is, if you are putting a 20% down payment, right now the way I understand what you said is you can use the down payment assistance in a certain area, which do you think is a kind of a not very good area, or could it be in any area? And second part to that question is, do you have to make a very low income, or could it be for anybody?
So there's different programs. I would confuse everybody if I just start reciting guidelines, which of course my brain wants to do, but there are programs that are restricted by income.
Okay.
It's not necessarily low. I mean, one of the down payment assistance, you can go up to 132,000
Oh, wow.
household income. You know, it's almost like a stair step. You know, in our area, the assistance programs are determined by the average median income. And certain products, you have to be 80% of the average median, others are 120%. So rather than confuse everybody with those guidelines, there are income limitations, but there are some programs that don't. Like we have a 0% down FHA loan where we do a first and a second loan, similar to down payment assistance, but you don't have any income limit. So, I mean, there's...
Oh, so there is a lot,
Yeah.
and there is a program for everybody and every income. It's not
There
that
really
I was
is.
thinking that, okay, if you're making two people income more than say 150,000, there may not be anything available for
No,
that.
there could be some solutions where you can do zero down, yeah.
Talk to
Yeah.
her.
So again,
This is what-
everybody's one size doesn't fit all. So the best course that we always recommend is start talking to a lender as soon as possible so that we can hear your situation and really see where you fit. Yeah.
So, okay, that gives us a very good insight into all, meaning some of our programs, or in general, taking a bird's eye view, we can know that there is a help available with the finances if you want it. I wouldn't now anymore say if you need it, right? Of course, if there is a need, there is definitely one, but you can use it. Is it free money, or does it come with some kind of condition that you have to live in the house for 40 years? I'm just throwing a number.
No, there's so some of the assistance programs are repayable, meaning it's a little, what we call a silent second, where it's just a lien on your house and you'll pay it off when you pay that loan off, either through a refinance or a sale.
Oh,
And then there's other programs where you have to live in the house for 3 years, and there's some that's 10. So again, depends which program it is. Some are repayable and there's no restriction, and some are forgiven after a certain amount of time.
so that's great. So, okay, you covered really well the conventional program and the FHA program, which I think is about 80 or 90% of the.
It's the majority. I mean, it's the majority of the people.
Okay.
Yeah.
We got to know today a little bit about quite a bit about conventional loan and an FHA loan. Now, my question is that only for FHA, of course, is for first-time home buyer. Conventional loan can be for primary residence, second residence, a vacation home, I call it, or a investor.
Yes, first I'll clarify FHA. For FHA loans, you don't necessarily have to be a first-time buyer. So you can be a second, third, fourth-time buyer. The benefit of FHA is that it's more lenient. It's for people that have lower credit, higher debt-to-income ratios, but it must be your primary residence, and you can only have one FHA loan at a time. There are some exceptions if you're moving, like let's say someone was coming to Texas from Illinois because of a job change or a divorce, you can have multiple FHA loans. So I just want to clarify that. But on conventional, if you're doing an investment property or a vacation home, which we call second home, or primary, then you do conventional. Yeah.
That is amazing information. Let me just tell you my little background. I used to be a lender about a decade ago and worked with a big bank, and believe me, I've gone through some tough loans, and the preparation is the key. Preparation in the sense that you are looking at all three segments of the area, which is, again, I'll drill it in your mind, is the income, credit, and asset. They all have to fit in the box of whichever guideline you are going to follow. And sometimes it can take a preparation of 18 months or more. And I've done that, and believe me, it was a successful. The client I worked with could get a $2.3 million home with the guidance from my department and me. So
Nice.
Jen is saying here, I think She has wealth of knowledge, something you just told me about FHA. I did not know. So see, things are changing on a daily basis. You need to tell your total vision, and I emphasize total vision that, okay, I want to buy a condo now. I have a client, and I'm just going a little bit of her story to you. Jen, you may be working with her. Come to know, she was buying a condo, and I'm like, okay, her daughter is going to the school around there, and she's buying a condo around there. But she always said she could qualify for a lot more. This condo is relatively cheaper. And finally, one day, just 2 days ago, I said, can you tell me what your vision is? What is your short-term goal for 2 years, or what's your 5-year goal? And she said, I want a big house, but right now I live in an apartment and I have to get out. That changes the whole thing for me. Now I'm focusing on getting her a bigger home and see if she does not have to go buy condo just to move in because it's readily available, and within 6 months she has to get out of it. So she doesn't have to do a 2-time moving. But it's very critical for realtor and the lender to know your full vision so they can work towards it. Well, let's move away from there now. The other program, which are 100% loan and 0% down payment, veterans loan, VA or USDA. Can you tell something about it?
Yeah, for sure. So there's actually 3 types of, I mentioned it and not everybody knows it. So there is actually a third one, which is the FHA loan.
Okay.
Not every lender has this one, so I'll go over the 2 first that almost every lender has. So veterans, if you served our country, thank you. You are eligible for a veteran loan as long as you have eligibility with the VA. So it's 0% down, and for first-time usage, it can go up to $2 million.
Oh, wow.
So yeah, first-time users. If you're disabled, there's some benefits there, like no funding fee, and if you're 100% disabled, you don't have to pay any property tax. So,
oh, really?
Yeah, really nice. So, but
salute to them anyways for
yes,
doing what they
you.
do for our country.
Absolutely. So there are benefits, for veterans. And then on USDA, that stands for U.S. Department of Agriculture, and that is a loan that's in the more rural areas on the outskirts of town. It's usually underdeveloped areas, not in the city for sure. So like in the Houston area, it's like deep. I mean, I think all of Katie's not in USDA anymore.
I think somewhere in Rosenberg too, I'm figuring it out. More outside the city limit you go,
the more chances.
More chances.
So it's in rural areas. It is more strict to qualify because it is a good loan, 0 down. There's some of the new construction that can qualify for USDA. You have to visit the USDA website and you have to put in the address, and it's going to tell you.
Qualify. So property has to qualify basically to make sure that the quality is within that jurisdiction. Is it no MI?
It's very low MI. There are income limits though. You do have to have a lower income. Okay. So in our area, I think it's under 80,000. Like it's as a household, and it's household income, even if the other person isn't on the loan. So it's very strict. And you have to have like a maximum of like a 43% debt to income. So what we find is most of the people that are in the low to moderate income area, they usually need the higher debt. That's where FHA comes in. But it's not impossible. I mean, there are many people that qualify for USDA. So you just need to get with the lender as quickly as possible to make sure you meet their very stringent guidelines. But FHA, not all lenders have this, but we do, where we'll do a 0% down loan. Now, FHA is just doing the 96.5% loan.
Right.
They're just doing the loan for the first loan. And then we come in and we have a company that'll do the second loan to really loan you the down payment is what it is.
3.5%.
They'll loan you the 3.5%. So you basically got 2 loans, and it's 100%, which means 0% down. So it's really, really nice.
And the closing cost can be contributed in the FHA program. And can you please correct me if I'm wrong? can it still be contributed by the seller?
Yes, so closing costs can be contributed by the seller, so you can definitely negotiate that. Sonal is an amazing negotiator. The important thing about that program is it cannot be mixed with down payment assistance. It does need to have closing costs come from the seller if that's going to be the case, or you pay the closing costs.
Yeah, there is another way to go around that, because down payment, if we are getting a seller contribution to pay for the closing cost, which is quite a bit more, but 3.5% we can see that can come as a gift too, right?
Yeah, you can get it as a gift from a family member. You could take it from a 401k. You know, there's lots of.
So there are lots of ways, guys. So don't feel that you don't have money saved up for down payment and closing costs, but you have a great income. You still qualify to achieve your homeowner's dream to get a home, to buy a home.
Yeah.
So please, come to Jen, me, if you're in Houston. You can still go to Jen if you're not in Houston, because I bet she can do the loans in how many more states?
I mean, we can do the loans in like 40 states.
Okay, great. This is a great information she's sharing with you. Let me ask you this, what about the jumbo loan? I keep hearing jumbo loans, so anything which is not like what, 600,000 and above, or can you tell us what is the new limit?
So yeah, the new limit, so a jumbo loan, just think of jumbo as big, right? Like Jumbo the elephant, that's what I think about, as the guy with the big ears. Jumbo is a nickname for a non-conforming loan. So conforming loans conform to Fannie and Freddie Mac guidelines, and that limit now is 766,000. So it's gone up quite a bit.
Wonderful.
That's a conforming loan. So anything over that it's actually 766,250. Okay. But it changes every year. It goes up as prices around the country go up. So when I first started in the business in 1995, it was like 198,000. So it was quite low.
I started in 2000 and it was about 417,000. So you can see whoever sets that limit understands that the lumber prices, things go up, and they are trying to keep you within that prime spending limit, so you can get the best rate. Because I think the jumbo rate is slightly higher.
Not always. Actually, right now the jumbo rate is a little bit, it's either the same or a little bit lower, actually.
Okay. That's awesome.
But the jumbo loans are for the larger houses. They usually do require 20% down. That is the caveat, is that they do require, in most cases, a 20% down payment. There's some less available, but you're going to pay for it in the interest rate, I can tell you that. So the rates will go up. So if you're doing a large loan like that, you need to prepare to put 20% down.
Yeah, and that is, if you can qualify with 10%, and what Jen said, if in case the interest rate is high, always remember, interest rate, you are dating. You can always refinance when your situation gets better, and houses are appreciating every year. Yeah. So, I gave you a clue.
Yeah, that's right.
Okay, so I think that gives all the program. Do you think anything I have left?
No, I mean, that really covers it. I mean, there are hybrid programs for people that need, low documentation, like we call it a non-QM loan, non-qualified mortgage. It's not a huge part of the people, but if you're looking at this like, hey, I want to do a bank statement loan or kind of a hybrid private loan, those things are available as well. It's better to just call me, because it might not apply to most of the people, so I might not want to talk about it, but there are other hybrid, different kind of loans available for people. Yeah.
It's a great introduction to all the programs, and now I'm going to ask the two questions when I'm really curious to know that a lot of people fail in getting a loan in spite of being pre-approved by someone as good as Jen. And can you give me one example that sticks out to you? Why would that happen? What kind of mistakes are they making so that their loan gets denied last minute?
So I have not had that happen in a long time, because with age and experience, I have become rigorous about asking the hard questions up front. What I can tell you is we get save-a-deals from people that get denied a few days before closing from the big institution that you used to work for that we will remain nameless. We get fallout from the big institutions because they just have so many layers. Experienced people are really on the back end, not the front end.
True.
And so what we see is nothing that's really, I don't want to say the client's fault. It's really usually the lender that doesn't ask proper stuff up front. So what I would encourage you as a home buyer, if the lender you are going with is not asking you a lot of questions up front, and if they're not asking you for documentation, that's bad. And so where we have seen things fail is home buyers, you buy 1, 2, 3 houses in your lifetime. You don't know. You just say, oh, I trust this big bank or I trust this person, and they're telling me I don't need documents for a pre-approval. Well, a pre-approval says we've reviewed your income, your assets, and your income, and your credit. So how can we do that without documents? So there are actors out there, there's companies out there that will give you the letter, which is a piece of paper, that says you are approved. We have viewed everything and you're good to go. And then they never asked for any paperwork. They just said, you have a credit score, you have a pulse, and you're breathing. That's not a pre-approval.
No.
And so the home buyers, they don't know and they don't understand. They're like, oh, this was easy. Just push that was easy button. And then later they get into the system and they're asked for a bunch of paperwork, and maybe they can't produce it because maybe it doesn't exist because the lender didn't ask enough questions on the front end. So that's the thing that I see repetitively is we get phone calls from people like Sonal. I don't know if you've called me on one lately, but realtors will call us because you don't ever let your clients get in that situation. So
well, I just had one happen, and I'll share that briefly. I didn't realize when I was showing her the home that she's pregnant and she's going to be on a maternity leave without giving HR the starting date. Well, her income totally fell out.
yeah.
And that was something completely unknown to all of us.
Mhm.
Her mom never mentioned it, and she was buying this home with her mom in Houston. She lived in California. So I never saw her in the middle, and those kind of things, right?
Mhm.
So I feel that when that happens, usually that's one of the very exceptional one. But the one which is very common, when I worked with that name brand bank who did not have a lot of exceptions or ways to work around the loans, was a person goes and buys the furniture when they knew we were trying to stretch to get his approval because his income was right at the dot where the max was allowed with his expenses of the house. So I think these are some points, and Jen does excellent job. So you heard her, she never had any issue, because I bet she talks to them.
Well, I won't say never, but through experience, I would say that I always rewind when mistakes happen, because obviously, we do a lot of loans. We have mistakes happen, and we have times where like, oh my God, I didn't see that coming. But I always rewind it, and usually, it's the lender's fault. We are the professionals. We do this all the time. Our marginal borrowers, we have a responsibility to beat it into your head. If you have marginal credit and you're right on the cusp of the debt to income, I have to be reminding you every day.
Yes.
Sonal, don't get any new credit. I have to make a big deal out of it because most home buyers, they just don't know.
Yeah.
And so you don't know what you don't know. And so I really always look back in the mirror and say, what could I have done better? It was my fault. I take full responsibility because I should have made a bigger deal. Because I've had I had a buyer days before closing. We had to recheck credit because we always do right before closing. And he had $70,000 in new credit card debt from the last month. And I'm like, who does that? Well, he's super sweet, and all his relatives, one needed dental work and the other needed this, and like he went out and took out all this credit, and I'm like, did you not know that we fixed it?
Everything can be fixed just the way she said it, but it delays it.
Yeah.
And sometimes you may have penalty if you're buying a new construction home, and if you don't close within their deadline, they start charging you. Some people are as bad as $500
Yeah.
a day.
Yeah.
And you don't want to become a victim of that. But very important thing, do not close any credit, do not open any credit. I just tell everybody, and it's just, I don't know what happens. Did they get amnesia and they just go and to the store and someone says, we are giving you 15% discount if you open a credit card, and they get tempted. So resist that temptation until you close.
You definitely have to, talk to your lender for sure. And that's where what you said in the beginning, the relationship is so important.
Yes.
It really is. And I think that when you're choosing a lender, choose someone that your realtor knows and has a track record, or, a friend or a family, someone who's used someone before. Because when you, and I'm not trying, and there's a lot of great lenders out there, and the big ones, and there's some people that go to an online lender and their experience is fine. I can only tell you that I get the calls when it's not fine. And it's because they're arm's length, like they're not losing sleep at night if your loan's not closing. They're sleeping just fine because they don't really know you. But when Sonal refers me somebody like that, now you're like in my inner circle now because she trusts you and knows you, you trust her, and now you trust me. So like that's a huge responsibility. So I would just say that people that know you and know the realtor, there's a different type of relationship there. So it does carry a lot of weight because last minute things and mortgage education and what you should do and what you shouldn't do, you're gonna have a higher level of experience and satisfaction, but just accuracy, which saves you time and money in the long run. So that's usually my experience. If that answers your question.
Yeah, I think she did an awesome job educating all of us. It's just good, like a practice. There is a myth though, when I was working with that big bank, everybody came to us because they thought, suppose I work with Wells Fargo or Bank of America or Chase, and if I work as a mortgage lender, that a mortgage banker there, it would be easy for us to do your mortgage. Well, let me break that myth for you. It's not any easier for us to do the loan versus Jen, who can have multiple banks to her access to give you the best rate. So going to Jen is not going to be more painful. And most of the lenders now, through their portal, can pull any bank statement. So please do not think that you go to the bank because you have an account. Yes, these banks are really good for banking, but not necessarily for mortgage. Let's keep that in our mind. And let's give a big applause to Jen for doing such a great job. And if you have any questions, shoot it to me or her. Jen Hernandez at Legacy Mutual.
It's actually Jennifer well, let me just give you it's better just my website.
Yeah.
It's Loan with Jen. Loan is singular, LOANWITHJEN.com. And there you'll find my email and my phone number. So thank you. So Sonal, we've gone through programs. What if now we go through just kind of a pre-approval to closing, like what that looks like?
Okay.
Okay, awesome. So you get your pre-approval. Hopefully they ask you for lots of paperwork, and you've got a great solid letter. You start looking at homes with Sonal. You're back and forth. You might contact the lender for numbers, hey, this price, etc., to make sure that it's, what they expect on pulling the trigger. And then once you have a contract signed with a seller, it's live. So one of the mistakes actually that we see buyers make is that they don't secure lending until the inspections are over. That's a big mistake. because usually that inspection period that, you have time to inspect the house and make sure it's, working and that you expect, what repairs would be, etc. That usually takes about a week, right? For all those things.
8 days.
And negotiate, So you need to start talking to a lender ASAP, because if you wait that 7-8 days, we're already a third of the way through till the timeline. So we need to just pretend like you're moving forward. And if it doesn't move forward from the inspections, well, we'll just void everything out and we'll freshen it up on the next house. So it's important that once you are under contract to talk to the lender. I mean, Sonal does a great job of letting us know anyway, but you need to definitely engage, pretend that you're moving forward in case you are, and you don't jeopardize the close date, because a normal closing is about 30 days. Sometimes we can do quicker if you want to negotiate, the offer. And,
if that is the bait to the seller to get the foot in the entry door. Sometimes I tell seller we can close in 20 days because it entices them, right? In this competitive market when they have 9 or 10 offers. And what she says is really good point. I tell all my clients, you must start your loan next day in processing. Let your lender know you can hold the appraisal.
Oh, of course. We don't do the appraisal till after the inspection period, but there's many other things that we need to do, like disclosures. We need to federal compliance. We have to send you disclosures within a certain number of days. And that way you can see them, you can see the numbers, all of this needs to be done within that option period to just make sure that you know what's what to move forward. And so in this average 30-day timeline, you're doing inspections, you're getting us fresh paperwork because pay stubs expire, etc. You're
new bank statements.
New bank statements, so keep those things handy. You're also shopping for homeowners insurance, and this is a big one because we've seen a lot of changes in homeowners insurance. In fact, I just recorded a new podcast recently about insurance and how to shop and get a great rate. So home insurance is a big thing. That's going to take at least a week to see what your premium is going to be. And we recommend that you shop with at least 2 to 3 people, maybe even more. And so you're doing all of these things simultaneously. I would say that the first week that you're under contract is the busiest. Inspections over here with Sonal, refreshing paperwork with us. The title company is going to be asking you some questions to get organized. So the first week you really need to have your radar on, make sure you're checking your email, because these different components of people are going to be coming to you for information. And then really, once you get us freshened up with everything, most of the other stuff is behind the scenes where we, the lender, we're re-verifying your employment. Even if we did these things at pre-approval, we have to freshen everything up, right? So we re-verify employment, we're re-verifying your bank balances, we're checking for large deposits, we're making sure you haven't opened any new accounts, we're checking with title on the title commitment, making sure all those things are clear. And then we are ordering the appraisal once you've cleared the inspections and yes, we're gonna move forward. We get the appraisal ordered, and that usually takes, 5 to 8 days to turn around. And so all of these things are kind of coming together 2 weeks in. And that midpoint, so that last 15 days, we're tying everything together, making sure that now that we have your insurance and we have the information back on taxes, that we're recalculating and showing you your final payment, making sure everything is okay. And we're really starting to prep the legal documents. We're finalizing underwriting. We're coordinating. The lender coordinates with the title and your insurance holder. And internally, we bring everything together in order for us to close. So the thing we urge people to understand is that first week is really crucial for you to be responsive. So if you're behind the scenes saying, oh, I'm just gonna wait until the inspections are over to get this started, you're really missing out, and you're gonna cause a lot of stress 2 to 3 weeks from that time when you're trying to bring everything together.
In this market, I'll tell you, I had recently, 2 or 3 months ago, we needed extension only for 1 or 2 days because there was a problem to find a right appraiser by the lender. and lender wanted 2 more days and seller refused it. Can you tell me what it told us? That they had a higher offer, which probably came in later behind my buyer, and they were eager for us to fall out so they can take the new one, right? So there are so many things, and I'm telling you, the best word when I hear from your lender, the file is clear to close, it is our happy day.
Yeah, the best scenario, we have someone right now that they're not closing for 2 weeks and we're already clear to close, and it's just less stressful. As you said, as these rates start to drop, there's going to be more buyers coming out of the woodwork, out of the walls to say, oh, we want to buy now. So sellers are going to get a little bit more bold.
Yes.
And they're not going to wait around for stuff. So we can't jeopardize that timeline. So we encourage you, get connected with that lender immediately so that you can get things freshened up just in case the 80% chance that we're going to move forward. Because more than not, I mean, we hope that inspections are fine, but if they're not and you cancel, not a problem. We just void everything out and we wait for the next one. So then what happens about, well, hopefully a week before closing. We like to get it to you a week before closing. Legal federal compliance requires 3 days before closing. We get you the final closing disclosure. Now, the closing disclosure is a formal legal federal document that has all the final accounting of your numbers. Your lender will go through that with you, or they should. They'll send it to you. You have to DocuSign it. If you don't have access to signing it online, then you'll have to go in person. And that gives you the final accounting of everything needed for closing. And for closing, you need to have a cashier's check or a wire.
Yes.
Definitely get those things going. At least if you get a cashier's check, you need to get it the day before closing at least, because title companies usually will not accept same day cashier's
because
checks.
then you won't
Fraud.
get the funding confirmation, and then you won't get the keys. Until the wire is received by the title company, you will not be able to get the keys of the house. So it is critical that you send the wire 24 hours before. If it's a cashier check, you can take it on the same day. But make sure then to get funded the same day, you want to do the closing before 1 p.m. or maybe 2 p.m. because banks close, and if it doesn't clear your cashier check, again, you are in the same situation.
Yeah, for that reason, we recommend getting the cashier's check the day before closing.
Oh, okay, makes sense.
Because a lot of title companies, there's a lot of fraud going on. And so the title companies need to verify the cashier's check. So if you just got it an hour ago before closing, they won't be able to verify with the bank.
True.
So I would get everything settled the day before. So that's why, again, that closing disclosure is really important, and it's a chance for you to be aware of everything regarding for closing. Now, and also when you're buying in Texas, beware your spouse, if it's your primary residence and you are legally married, your spouse, whether they're on the loan or not, must be at closing to sign a few documents. We are a community property state, and so that is the biggest thing also, is if the lender doesn't tell you, sometimes especially out-of-state lenders, they may not really realize until it's too late, like, oh hey, yeah, by the way, your spouse needs to go. So your spouse will need to show up at closing. So we do have some people that buy and their spouse is going to be out of town or out of the country, so it's important to work those things out with a lender ahead of time. We can get a power of attorney, things to happen. So you're at the closing. The closings now really are less than 30 minutes because most lenders do now most of the documents online in the morning, DocuSign. At least we do, where we send you most of the documents that you sign on DocuSign before you even get to the closing.
I'm seeing most people doing it now, so it's like a hybrid closing. You have signed
half
upfront,
online.
on DocuSign, but some which requires your wet signature, you have to go to the
the title company. The stuff that's notarized, you have to have a live or what we call wet signature. So and so you're at the closing, and then the title company, which they're like the title attorney, they will verify and send the lender verification that both buyer and seller have signed. They'll send us those documents and we'll say, great, you're authorized to fund. We usually recommend that if you're getting, painting or moving, etc., that you usually wait half a day. Sometimes it doesn't fund immediately. Sometimes especially if it's a busy time of the month. It
Yes.
takes a few hours, so we always recommend setting those services up for the next day, not the same day.
Preferably, but if you must, at least wait half a day.
Yeah.
You know, one day is the best,
Mhm.
even to get your utilities on, getting it transferred on your name, things like that. Thank you so much, and I
Yes,
think
for
this
sure.
gives us a 360-degree picture of getting pre-approved, going through the closing.
Mm-hmm.
All right, so bye for now, and see you all next week.
Yeah.